Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Yet another volatile session on Dalal Street ends with marginal losses for Sensex and Nifty, but financial, mid-caps and small caps buck the downtrend with a sharp rally. US President Trump says he expects America's 25% tariffs on automobile, pharma and semiconductors imports will begin in April. Tells Fox News it's unfair that Elon Musk has to build a factory in India to avoid tariffs. Reiterates that he has made it clear to Prime Minister Modi that India will not be spared from reciprocal tariffs. Tesla is likely to drive into India as early as April. Sources say the company is considering importing electric vehicles from Berlin and has already identified showroom locations in Mumbai's BKC and Delhi's Aerocity. Adds that while Tesla has not committed to manufacturing in India yet, it's likely to source components worth $1 billion in 2025. Hexaware Tech returns to Dalal Street on a firm footing. Shares list at a 5% premium to the IPO price. The $1 billion IPO was subscribed nearly 3 times. US President Donald Trump criticizes Ukraine's Zelensky after the latter complains of being excluded from the peace talks in Saudi Arabia. Says Ukraine could have made a deal earlier to avert the war. The US government says both Moscow and Washington have agreed to appoint high-level teams to begin working towards ending the conflict. A top Hamas spokesperson proposes releasing the remaining 6 Israeli hostages in one go and return the bodies of 4 others in exchange for Palestinian prisoners and a permanent ceasefire in Gaza, but rejects Israel's call for its disarmament and its removal from the enclave. Salary hikes this year are likely to be the lowest in 3 years. A survey by On predicts a modest 9.2% increase across sectors. Also says the automobile and engineering design sectors could see double-digit increments. All right, let's start with the market action. Sensex and Nifty ended with marginal losses after a volatile session, but financial stocks, along with mid-caps and small caps, bucked the downtrend. Nifty Bank Index was up 1%. The mid-cap and small-cap index fared even better. Prashant Nair is here with a market wrap.
Well, once again, like yesterday, one has to say it was a good session, although it didn't show up very much as far as the Nifty goes, which was absolutely flat by close. Now, the Nifty Bank was much better. It actually picked up pace in the last 30 minutes of trade. When we started at 2:30 last hour, the Nifty Bank was up 0.5%. It ended about 1% higher through the course of the day by 3:30. And of course, broader markets even better. Small cap index, almost 2.5% gains in the small cap index. It was the sole loser yesterday, while the rest of the market did see recovery. So today it made up for that. Mid caps also ending higher, but underperformed what the small caps did. Remember, these are, of course, all just recoveries we are seeing for the very first time in a strongish kind of way after many, many days of lower markets. Now, what was up on the Nifty? BEL was number one. There was Hindalco and Aisha, which were higher as well. On the downside, there were names like Dr. Reddy's, there was TCS, Infosys, and HUL, which ended lower as well. Strong market breadth. I'll start with what was higher in the broader market. So defense names, Mazgaon, Garden Reach Shipbuilders, Data Patterns were some of the names. The number one volume-led gainer in the NSE was Bombay Stock Exchange, which is back above 5,500. Tata Investment Corporation, again, a capital market play. It was up strongly. It was up 15%, but ended slightly off that level. Swiggy was another consumer name, along with Zomato, which did well. RVNL, AG's Logistics, KRN Energy, Reddington, PG Electroplast, Minda Corp, BKG, Goldian, and Tar GVK ended about 20% limit up as well. So lots of action as far as single stocks go. On the downside, Godfrey Phillips, nothing very large. Adani Green, Credit Access notably was down 7%. So that was a big volume-led cut today. And a Senco, which had popped 5% higher, gave all of it back today with about a 5-6% cut. But all in all, very strong market breadth, and that really is what matters for portfolios. And one hopes as we get into the fag end of this week over the next couple of days, the repair and recovery continues. Back to you.
Thank you, Prashant, for that. Gold prices fell as investors booked profits following after the yellow metal's recent record-breaking bull run. Now, safe haven demand also eased amid talks between the US and Russia to pause the conflict in Ukraine. Onto the energy markets, where crude prices edged higher. This after oil flows through the Caspian pipeline consortium were reduced by 30 to 40%. Disruptions in US oil supply owing to cold weather conditions also weighed on prices. Right, US President Donald Trump's tariff threats continue. This time, he wants to impose tariffs of 25% on automobile, semiconductor and pharmaceutical imports. Trump said he will most likely make the announcement on auto tariffs on April 2nd. Indian pharma stocks, including Dr. Reddy's Laboratories, Lupin, Zydus and Cipla, slumped in today's trade. The projected tariffs will hurt Indian drug makers who sell over 38% of their exports in the United States. India currently imposes a 10% import duty on US medicines. If Trump imposes a 10% duty on India's exports, Nomura says it could erode FY26 earnings estimates of some of these companies by 6.5%. Granules, Gland Pharma and DRL have the highest exposure to the United States, with the country accounting for over 50% of the revenue. Here's more on what Trump said about his plans.
Donald Trump has played his next move on tariffs. The US president said Tuesday that he would impose levies of about 25% on imported cars and similar duties on drugs and chips. Trump says his action on tariffs is already producing results.
I do want to say while I'm up here, I've been contacted by some of the biggest companies in the world. And because of what we're doing economically and through tariffs and taxes and incentives, they want to come back into the United States. And we'll be announcing various very large companies, the biggest actually, and they'll be coming back, having to do with chips and having to do also with cars.
Trump also said more details on the auto tariffs would come on April 2nd, a day after cabinet members are due to report to him on options for new measures. He has long complained about what he sees as unfair treatment of US automotive exports. The EU, for example, imposes a 10% levy on vehicle imports, or 4 times the duty imposed by the US. However, Washington collects a 25% tariff on most imported pickup trucks, protecting a lucrative part of the market for domestic makers like Ford and Chevrolet. Trump says tariffs on drugs and chips will also start at 25% or above, and then go substantially higher over the course of the year. He didn't set a date for starting those levies, saying he wants to give pharmaceutical and tech firms time to set up US factories. Since his inauguration a month ago, Trump has stacked an extra 10% tariff on all imports from China. He's also set a March 12th start date for tariffs on imports of steel and aluminum. And while he has postponed measures targeting Mexico and Canada, he's also told his team to draw up reciprocal tariffs matching those imposed by all trading partners.
Right, Trump has reiterated that he will not spare India from reciprocal tariffs. In an interview with Fox News, Trump recalled a conversation that he had with Prime Minister Narendra Modi at the White House last week. Trump said that he told the Prime Minister that US will charge whatever India charges. Trump claimed that India charges the highest tariffs in the world and the import duty is 100% on cars. Trump said, and I quote, "It's impossible to sell a car practically in India, as an example, India," end of quote. He also said that it's unfair that Elon Musk has to build a factory in India to avoid tariffs. Trump went on to say that nobody can argue with me and reiterated that India will face reciprocal tariffs starting April. Electric car maker Tesla is looking to enter into the Indian market by starting retail operations by April. Sources have told CNBC-TV18 that the company is considering importing its electric car from the Berlin plant. We've also learned that the company has identified 2 showroom locations in Mumbai and Delhi. Parikshit Luthra joins us now with details. Parikshit, what will be the impact of Tesla driving into India on the auto industry at large?
Well, lots been spoken about Tesla's India entry, but let's put things into context for our viewers. Total electric car sales in India in 2024 were around 100,000 units. Tata Motors was the biggest player with over 61,000 units sold of cars costing under 22 lakh rupees. JSW, MG Motor, M&M, BYD, Stellantis were other players selling EVs at a price point under 30 lakh rupees. 95% of total electric car sales, or 94,000 units, were for cars costing less than 25 lakh rupees. The EV market over 35 lakhs price point is small, with BMW, Mercedes, Hyundai, Volvo and Kia being the major players, and this market was just 3,700 units strong, or 3.7% of the total EV market in the whole calendar year 2024. Overall, electric car sales could double in 2025 to 2 lakh or 2.5 lakh units. Launches by Maruti, Hyundai will increase the EV market. JSW, MG Motor, M&M will ramp up their EV play in the premium electric vehicle segment. Mahindra & Mahindra is looking to sell at least 50,000 units of BE6 and the XEV9e in 2025. JSW MG Motor is launching the Cyberster under 1 crore rupees. Now, according to Indian industry sources, Tesla's main competition would be from M&M and luxury players. The BE6 and the XEV9e are priced between 26 to 30 lakh rupees. And Tesla may launch in India at a price point of rupees 39 lakhs if you include the 70% duty structure, or 49 lakhs if it goes for a higher variant. BMW iX1 is the most affordable luxury electric SUV right now at a 49 lakh rupee price point ex-showroom. Cost of other luxury electric cars is over rupees 60 lakhs. As per some estimates, Tesla may see initial sales of 10,000 cars per year at a 39 lakh rupees price point and 5,000 cars per year at a rupees 49 lakh price point. So why is Tesla yet to make up its mind on manufacturing in India or making in India? Well, here's the most possible reason. Tesla sold around 1.79 million units in 2024. The company's global sales fell by 1% over 2023. Tesla has been offering several discounts to woo buyers, not just in America, but in different geographies. China's BYD sold 1.76 million EVs in 2024 and was a very close second to Tesla. Tesla sales fell 60% in Germany and France in January this year. India is offering them a 15% concessional duty rather than 100%, but Tesla must commit $500 million in manufacturing in India and must also generate 7,500 crores in revenue by the 5th year of operations if it applies and gets this 15% concessional duty. The company has to have a business case to make in India and export at a time when its global sales have fallen and their existing plants are not fully utilized. And this is what many familiar with the company's strategy are telling us. Tesla has to also consider when it can actually break even or become profitable after investing in India. After all, $500 million is not a small amount. The company has already plants in US, China, Germany, and the plant in Berlin cost them around $5 billion just in 2022. Then, Donald Trump has now urged companies to make in America rather than other nations. In fact, he told Fox News that Musk can manufacture in India, but that would be very unfair to America. So clearly, starting sales by importing cars is the easier option for Musk rather than immediately committing to manufacturing in India.
All right, thank you, Parikshit, for that update. And staying with trade relations between India and the United States, the Commerce Ministry has scheduled an inter-ministerial meeting today to discuss trade ties between the two nations. Sources have said that the meeting is being held to seek inputs for the multi-sectoral trade deals with the US. We've also been given to understand that US Commerce Secretary and Indian Commerce Minister Piyush Goyal will meet soon. United States Securities Market Regulator has reportedly sought help from the Indian government in its probe against Gautam Adani and his nephew Sagar Adani. This investigation is pertaining to the alleged securities fraud and $265 million bribery scheme. A report by Reuters has suggested that SEC said that both Adani and his nephew are located in India and hence it requires seeking assistance from the Indian government. Right, coming up next, salary hikes this year are likely to be the lowest in 3 years. A survey by AON predicts a modest 9.2% increase across sectors. Welcome back. On to a CNBC-TV18 exclusive. MobiKwik co-founder Bipinpreet Singh says Indian regulations in the fintech sector can become like a big black box for investors. Speaking with Shireen Bhan, he also added that India hasn't even scratched the surface in terms of becoming truly financially inclusive. Speaking with Shireen Bhan, co-founder Upasna Taku also revealed that they had to defend the Indian fintech sector first and then the company during their IPO roadshows.
You know, when you're sitting here in Delhi or Bombay and we are passing regulations and or taking action, we think positive and negative, we don't realize that the people who look at companies like us, whether it is private or public, how they think about these decisions and what they understand and comprehend, because it becomes like a pretty big black box where the clear conclusion for a lot of people is maybe the regulators and the government don't want fintech.
Which they've clarified, to try and send out the message that no, that's not the case. That
but
we do
the
want
actions
to support and
that take place, actions that take place actually point to the contrary, right? For many of them, and then it's hard to justify that actions are against certain entities only, and it's not against a particular sector. But the media blow up that results from that. See, somebody sitting in Singapore, I met, a very, very big Swiss bank. We were talking to them earlier in our roadshow. I spent 1 hour with that analyst, a very well-respected analyst, just discussing what does the regulator want. And it was not about MobiKwik. He didn't spend 1 minute on MobiKwik, and I had to educate him, saying that this is what is happening. It's because I think there is a gap in the communication, and that gap, has to be closed. Because fintech as a sector, I still see as a sunrise sector, but with this kind of environment now, if you see who is investing in fintech, whether it is private companies, is not the preferred sector for investment. But India needs billions of dollars in investment in fintech to make the dream of truly inclusive finance happen in India.
I want to tell you that we met many 1,800 investors in our roadshow in October, November last year. Typically, all these meetings are 1 to 1.5 hours. In most of these meetings, first we were defending the sector, fintech India. Then we are defending, our segments of business within that, and then we are defending our own numbers and our competitive position.
Well, appraisal time is around the corner, and if we were you, we will sum up the Aon survey by saying you should not get your hopes too high. The survey reveals that salaries will increase around 9.2% this year. That's a marginal decline from last year. The survey analyzed data from over 1,400 companies across 45 industries. Shivani joins us now. Shivani, which are the sectors that are expected to top the chart this year?
Well, yes, salaries in India are set to grow at a slower pace next year. According to Aon's latest survey, Indian companies are expected to hike salaries by 9.2% in 2025, slightly lower than 9.3% in 2024, marking the third straight year of moderation. Salary growth has cooled from 10.6% in 2022, reflecting margin pressures and a cautious business outlook amid global uncertainties. Sector-wise, auto and engineering design services are set to lead the pack with projected hikes of 10.2% in 2025. While the banking sector is expected to see the lowest increase at 8.8% average. The technology sector, once the star performer, is likely to see salary hikes of just 7.7% next year, the weakest across industries. Real estate is also losing some steam, with projected increments easing to 9.7% from 9.6% last year. Meanwhile, companies are holding on to their workforce. Attrition rates have fallen from 17.7% in 2024, down from 18.3% in 2023, and significantly lower than 21.4% in 2022 following the Great Resignation time. The survey says that India's economic prospects remain stable, but geopolitical tensions, global trade shifts and a rapid rise in AI are making companies cautious, prompting a sharper focus on talent retention, workforce skilling and cost optimization. Back to you.
Right, thank you, Shivani, for that. The stakes will be high when India faces Pakistan this Saturday in the ICC Champions Trophy, not only on the field but off it as well, with online betting applications bracing for a rise in activity. The rise of such platforms in India have also given users an opportunity to bet on the outcomes of questions that go beyond the world of sport. Ashmit Kumar is here with more. Ashmit.
Today marks the beginning of the ICC Champions Trophy, and that's important not just for cricketing aficionados, but that's also important for a very large and wide online gaming and betting space. And betting and gambling is the key word here. That's the big concern, especially since there are reports which seem to suggest that these betting and gambling activities spike whenever there's a large cricketing tournaments like the Champions Trophy, and more so in case of the India-Pakistan match. That's always a big draw. February 23rd, that's the key day, and there's an anticipation that there will be a spike in these online betting and gambling trends come that India-Pakistan match on February 23rd. And the newest kid on the block that is in fact being a part of this, these online activities are options, are opinion tradings. Now bear in mind that these opinion trading platforms or opinion trading applications, they essentially provide questions in a yes or a no format. So for instance, the question that could come up on one of these platforms come the India-Pakistan match is, who's going to win the match? And then there'll be a yes and a no option, and that will allow users to come online and then subsequently place their bets on either yes or no. Now, this is something that many experts say falls foul of the IT rules. Now, bear in mind, the IT rules do not allow intermediaries to host betting or gambling applications. In fact, very clearly, the IT rules define wagering and betting to be a case of betting on an outcome, which this clearly appears to be. In fact, very recent reports as to how far and wide these trends are of online betting and gambling. A recent report by the Rashtriya Raksha University points out that as way back as 2003, the online volume that were being seen was to the tune of 3 lakh crore rupees. By 2017, this grew to about 10 lakh crore rupees. And more recently, the run rate that we are seeing is to the tune of around $1 billion every month. That's the strike rate that you have, almost 9,000 crore rupees in deposits by users at these online betting and gambling platforms every given month, and this subsequently leads to heavy tax losses as well. Further, what's important is that there appears to be a regulatory void. This very same report points out that state legislation does not deal with online betting and gambling, that the central legislation, which in this case happens to be the IT Act, has very limited powers. There's no dedicated legislation, there's no dedicated regulator. These betting and gambling provisions are not a part of scheduled offences under the PMLA, and these in fact are some of the recommendations. So clearly, the concerns being cited by multiple stakeholders with respect to betting and gambling, and more specifically with respect to opinion trading online.
All right, thank you, Ashmit, for that. With that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.